May profits be upon you. Welcome to another weekly Forex forecast. We're going to take a hard look at gold. We're going to do our top-down analysis from the monthly to the weekly to the daily, and maybe even take a sneaky peek at the 4-hour. All right. So let's start from the top. This is what I want you to see on the monthly, right? What do we have here? What we have here is a bullish market. You see, come on, you see the impulsive move to have it go sideways, right? Wow, what is going on here? My mouse is getting stuck, man. All right, you see this accumulation. You see this manipulation as it sweeps the lows, goes back into the accumulation, this consolidation range here, and then we get the breakout or the distribution. This is beautiful. This is beautiful. And you had to be patient through it, but you knew it was coming after you saw this manipulation down there. All right. This is how the market moves, folks. Now, we are in a bullish market. That aside, what I want you to see here is order flow and narrative. We see that we're bullish. Do we know that we're going to be continue to be bullish? Well, there are a couple of things that we look at. One is the fair value gaps. We have a fair value gap formed. Price could use this fair value gap to tap back into once it goes from external or a high back to internal, which is a fair value gap or an order block. But in my case, I tend to put more emphasis on fair value gaps. But the internal targets are fair value gaps and order blocks. All right, price uses that as a stepping stone to go higher. Boom. Okay. So, but I also want you to see that we have a 3-candle configuration here where each successive candle closes above the high of the other. All right. The 3-candle configuration is what makes up the fair value gap using the high of the candle number 1 and the low of candle number 3. This is the gap. This is where fair value is offered. Price comes back into it as the fair value is offered and uses it to go higher. Okay. If price is not looking to offer fair value, it's looking for liquidity. All right. That's at highs and swing lows. All right. Swing lows. All right. So in this case, we see that the fair value gap was formed and price closed above the high of the second candle. That gives us a different name for this. This is a breakaway gap or a runaway gap. We don't see price needing to come back into this gap. All right. Why? Because there is probably a 1 time frame lower fair value gap that can be used to go higher. And I'm going to show you what it is. All right. We're going to go to to the weekly from this monthly and find that fair value gap. It'll be it'll be obvious. If we go to the weekly, there we go. And there is our fair value gap. This is how we know that price has the intent to go higher. Price comes back, stings into it, and goes higher. You understand? That's how this works. All right, there's a fair value gap under here. All right, that was nested within the monthly price. Didn't have to come all the way back down here. Instead, it went to the fair value gap that was produced on the weekly, and it's doing it again. 1, 2, 3. This is our 3-candle combination. What do we see in that 3-candle combination? A bullish fair value gap. All right, and the third one closed above the high. That makes this a breakaway gap. Am I correct? Yes. All right. And what are we looking for? We're going to be looking for evidence that price doesn't need to come back here. All right. We're going to find a bullish fair value gap somewhere in here for price to come back to and then go higher from without needing to come back here. Let's go to the daily, one time frame lower. And what do we see? There is our bullish fair value gap. We can get rid of this and we can see that price did come back into this fair value gap without having to come down lower, stung into it, and we see price pushing higher. Now, how does this relate to what's happening this upcoming week? Well, price found the bullish fair value gap, stung into it. Wasn't the strongest reaction, but we did get a good reaction. Price came back down and then produced this very respectful wick and a small candle body close, above that candle. So the same way we look for evidence that price is going to go higher, maybe find a bullish fair value gap on the next lower time frame in here, the way we just did it with for fair value gaps for the narrative on the higher time frame, the same way we look for evidence that price will likely continue higher with the current close of this candle here. And what are we going to look for? We're going to look for a bullish fair value gap in here that price could possibly, potentially continue higher from on the 4-hour time frame. And there it is, sitting right there. All right. So come Monday, well, actually tonight, what I want to see is this. I'm looking for a high probability trade to the upside from here. That's it. All right. There's good likelihood that this is going to hold. One, I can see that we have some support here around this price range at 227.50. All right. I also see the fair value gap. I also see that we have a higher low versus the previous swing low. All right. I like my chances on this, and we have just taken this high, which is an external range liquidity. What does the price do? Go to internal range liquidity. All right. If price comes back here for internal range liquidity, which are fair value gaps, I can just get this one to act right. I think there's a high probability chance that this holds price and allows price to go higher to reach for our daily draw on liquidity here at that high. Last week's, the previous weekly high here. I think that's going to make a very good target. And I believe it shall be hit this coming week. Maybe hit Monday, Tuesday, going into Wednesday. I understand that there's NFP coming this week, so be careful. Trading, get your trades in, I would say, before Thursday. Thursday trading the day before NFP is not recommended. All right. But I think we have a good chance of hitting this target. Now, for a weekly target, I'm going back to the weekly time frame. All right. I'm going to use the trend-based Fibonacci retracement tool from swing to swing, swing low here to swing high. Not this, because this is lower than that. All right. Swing high here. Then back to the next swing low, which is this one. And then I want to move this over there to the side. And there you go. And you can see we're almost reached the 80% target. So I'm going to mark that right there. I'm going to mark it right there. And I'm going to mark this one here. This is a further target, obviously. Further target at 29.18. I'm looking at 3,000. That price will, there's a good chance price could reach. But for now, this is my weekly target. You see my daily target. Let me get rid of this. All right. You see my daily target? I like to set a daily and a weekly target. All right. Intro week. This will be the first one, the immediate one. This one, I'm hoping that we can get this by Friday. Got it? I'm hoping we get this one in the next couple of weeks. That's the way this works. I hope you enjoyed this video. I hope you learned something. If you did, do make sure you hit me up in the comment section and say, "Hey, man, that was good stuff," or say, "Hey, man, that's not so hot." Okay, make sure you pay attention to the comment section throughout the week because I drop uh, updates to this the progress of these trades, this analysis throughout the week in the comment section. Okay, so make sure you do that, and if you want to get direct notifications, you want to go ahead and subscribe to my channel because you know that way you can get the notifications direct to you, and you won't miss anything. Okay, I hope you have a great week next week, and I think this is our strongest bet of all of the analysis I've given this weekend so far. So watch gold. I think if you're patient, the buys will be there. I'm not interested in taking any shorts. Nope, just not. Okay, I'll see you next week. Thank you. Actually, I'll see you in the next video.